Hey everybody, welcome back to the channel. Today I want to do the Kraken DR IDR using ICT concepts, the weekly review on the 5-minute chart for October 16th through October 20th. This is a little late. I've had some things going on the last 2 weeks, so I didn't get the chance to do these reviews. So I'm going to do the last 3-week reviews over the next 3 days, and then we'll go back to weekly on Sunday. So I hope you enjoy this, and let's put the markings on the chart here. Okay, so Monday, the 16th, we get confirmation at 10:30. We have a fair value gap right here. Could have taken this entry because our time window is at 11 to 1:30 to trade this. Okay, so we came back, we took our trade at the 5-minute fair value gap and 5 handle max, and it takes us out, right? I've not been trading every day here, and if I take a loss or a win, I only take one trade during this time because I'm always taking the silver bullet entry between 10 and 11, and then I'm taking the PM silver bullet as well. So I usually don't have much time to take more than one trade here, but we started Monday with -5 handles, so that's where we're at. Tuesday. All right, Tuesday we get confirmation to go long at 10:35, and when we have an order block here. Now, ICT has taken the order block from the body, the whole wicks, and then if the wick is longer than the body or just as big as the body, he'll take it just as the wick. So here's an order block, institutional order flow entry drill right there. And so we get in 1 to 3, risk 5 for 15 handles, we get 15. Now this did go up to, I want to say right at close to 25 is where it could have ended up. So having a runner is good, but now we're at plus 10 for the week. Wednesday. All right, Wednesday we have confirmation to go short at 10:35, and we at 11 o'clock we look left. Now there is a fair value gap right here. Why do I not have it marked? Because it's right in the middle of the 0.5 standard deviations, and I want to be above that. So I don't take one that's in the middle of it. So the first one we have is this fair value gap. We also have this fair value gap from here to here. So this fair value gap is actually that big, okay? But I have it right here because from right here to here, this is a balanced price range. So I know price doesn't want to go back there in the immediate future or anytime soon. It has no reason to. So I'm willing to take this trade here as long as my stock kind of goes up higher. Now I didn't want to wait till they go in here because I knew it may not ever hit this second fair value gap. So I wanted to get in, and that's was my risk. If it would have gone up higher and took me out, so be it. I would have been a loss, and then I just would have had a loss. You could re-enter. I'm not, but you could have. So either way, we got in. 5 handles was protected. We've got 15 handles here. Now it does go down to 23 handles. So again, a runner would have been nice. So now we're at plus 25 for the week, and that was Wednesday. Thursday. Okay, Thursday. We get confirmation a little late. We get it at 11:15. And it's not like by any means an aggressive candle to go short, right? It's just kind of it barely closes below the line to confirm. And I've been noticing that when you just kind of have a barely confirming it, they're not very good days. This obviously was not a very good day. But we look left. We have this big fair value gap here. And you could have taken it in the middle of the fair value gap if you wanted. It still ended up being the same result, so it didn't really matter. We lost this trade. Risked 5 for 15. We lost 5, so now we're positive 20 for the week. And that was Thursday. Friday, we have confirmation to go short at 10:35. We look left at 11 o'clock. Started here, we look left, we have this is more or less a propulsion block. Should rename that to propulsion block. Okay, because you have an order block here, this trades into that order block, propulsion block, it comes down, right? Now, here's the deal. We took it right here instead of the mean threshold, which is the midpoint of an order block or a propulsion block. This is not 60%. You know, we can take partials at 60%, which is like right here, and then we could have gone break even, right? Looking back, that would have been great here. Had we moved our entry, since this whole propulsion block is basically 5 handles, our whole stop, what we should have done, and looking back and analyzing this, is taking a consequent encroachment so we can actually go above the order block or propulsion block. That's what we should have done, especially since our max 5 handle stop was the entire propulsion block. Is actually a propulsion block's actually bigger than our 5 stop. We definitely should have been in the mean threshold area. Had we done that, okay, we would have been able to take a partial and moved our stop to break even. So we would have been plus 9 handles, that's 60%, and then break even, versus minus 5 handles. Okay, so had we played this right, had we have our stop is as big as our order block, propulsion block, we should have taken the mean threshold, which is the midway point. We should have had our entry there, so our stop could have gone above this. And had we done that, we would have been over 60%. We would have taken a partial and moved our stop to break even. So the reason we took negative 5 handles here is because we rushed into our trade, and we took it right there, and our stop didn't even cover our propulsion block. Still would have lost, mind you, would have broke even, but that's that. So that leaves us at plus 15 handles for the week. So that is your weekly review on the 5-minute chart for October 16th through October 20th.